Ever wondered why some stocks seem to grow at an almost magical pace while others seem to languish in the doldrums? Today, we're going to lift the veil on the mysterious world of stock growth. First things first, it's important to understand what we mean when we talk about stock growth. At its core, stock growth refers to the increase in the price of a company's shares over time. This growth is what every investor dreams of, buying a share at a low price and selling it later at a higher price. But what drives this growth? The primary driver of stock growth is the company's earnings. When a company performs well and its earnings increase, investors are willing to pay more for its shares. This pushes up the price of the stock. Think of it as a popularity contest. The more successful the company, the more people want to own a piece of it, and the higher the price they're willing to pay. But it's not just about earnings. Stock growth can also be driven by investor sentiment. This refers to how investors feel about a company's future prospects. If investors are optimistic about the future, they'll be willing to pay more for the company's shares, and this can drive stock growth. On the flip side, if investors are pessimistic about a company's future, they'll be less willing to pay for its shares. This can result in stock price decline. So, it's clear that investor sentiment can be a powerful force in driving stock prices. Another important factor in stock growth is market conditions. When the overall market is doing well, individual stocks tend to do well too. This is because a strong market often indicates a strong economy, which is good for businesses. To wrap it up, stock growth is driven by a combination of factors including a company's earnings, investor sentiment, and market conditions. It's a complex dance of numbers and emotions that can result in big gains for those who understand how it works. But remember, while stock growth can be an exciting prospect, it's not guaranteed. Investing in the stock market always involves risk, so it's important to do your research and consider your options carefully. So next time you see a stock's price soaring, remember, it's not magic, it's a result of a company's performance, investor sentiment, and the overall market conditions. And who knows? With the right knowledge and a bit of luck, you might just find yourself on the winning side of the stock growth story.